I mean, India's fifth largest lender is expected to report a 3.4% drop in profit after tax to about 3,377 crore versus 3,495 crore in the year ago period. However, net interest income, which is a difference between interest earned and interest paid, is expected to rise by about 9.3% again on a year-on-year basis to 6,670 crore from 6,102 crore in the year ago period. Net interest margin, which is a key measure of profitability for financial institutions, may come under pressure both on a YOY basis as well as sequentially. Deposit growth is expected to be healthy at about 17% YOY and 4.5% QOQ. Loan growth is seen at 17% as well, again on a year-on-year basis, and 4.3% on a quarter-on-quarter basis. Slippages are expected to remain at around around the Q3 levels, while asset quality may improve or at least remain stable for the quarter under review. Numbers aside, the key things to track will of course be the management commentary and outlook, especially considering the recent restrictions imposed by the Reserve Bank on India. So how would that impact the bank's earnings going forward, and what steps it is taking to mitigate the concerns raised by RBI? Those, I think, will be keenly eyed in the management commentary. Now, remember, Kotak has been plagued by negative news lately. First, it was the curbs imposed by RBI on onboarding new customers online as well as issuing new credit cards. Then the bank's joint MD KVS Manian abruptly resigned. Now all this has rattled the stock. It is down about 11% in the last 5-6 sessions and even made a fresh 52-week low today. Amar, I'll come to you. What should one do with the stock now, sir? I remember the last time we spoke, you said that 1500 is a big support for Kotak Mahindra Bank. Is that still the view? By the way, we are still hovering above that 1500 mark. So what's your call on Kotak Mahindra now as things stand?
See, if you ask me, Kotak Mahindra, I've earlier also talked about that. This is one bank or one stock which any investor would have invested in for the last few years, wouldn't really have made any returns. I would say negative returns would have been there. And because the stock has been not, if you compare it with ICICI Bank has delivered superior returns. If you look at Axis Bank, they have delivered superior returns. If you look at SBI, they delivered superior returns to investors. But if you look at Kotak Mahindra Bank, it's really disappointed the investors in terms of returns. And this latest, I would say, guide by definitely doesn't make things better for the stock.